Hey everyone, welcome back to the channel. Very excited, very special episode today. We got Michael Kovacs, CEO of Harvest ETFs, back on the channel to discuss their new high income shares. They have launched a bunch of them and an all-in-one. So I'm very excited to talk to you about all of these because it's making a lot of buzz in the community. How's it going, Mike? Thanks so much for joining us.
Oh, it's going great. Thanks for having us on.
It's always a pleasure. And just in case, I'm sure my audience is well aware, but you guys have launched additional high income shares, which are single stock covered call ETFs, basically. So you got one for MicroStrategy, for Coinbase, Palantir, Tesla, Meta, and also an all in one, the stock symbol being HHIS, which is this one
hmm
right here, the
hmm
diversified income shares, which includes all of them basically. So we're gonna discuss all of this today's episode. So let's just start with the basics. Stock selection. So you guys decided for your next ones. You already had Eli Lilly, Amazon, Microsoft, Nvidia, but you added, like we saw, MicroStrategy, Coinbase, Palantir, Tesla, and Meta. Pretty hot stocks.
hmm
Some of them more hot than others. Some of them, more classic like Meta. So let me ask you first question: how are you guys deciding which stocks to do this strategy on?
Okay. Well, first and foremost, the first four we chose, they're all sort of large cap, well, sort of top traded
Hmm.
U.S. names. All of them have to have option on them as well, so that we can monetize that volatility. And also just sort of what's popular. Like obviously, Nvidia is a very big name because of sort of the growth of AI and the chips that they're producing. And then you got a company that we've just recently added, like MicroStrategy, which is very much tied into the sort of corporate long-term Bitcoin growth strategy. So that's very popular, very talked about. So we want to have names that are not just large cap, but are also very much in the news and are well traded. So we're always looking at different names, and these additional five seem to make sense. And of course, as we talked about before, having the all-in-one strategy as well.
Okay, perfect. So the first four that came out, you had leverage versions, non-leverage version, and .u versions. The first set, these ones have leverage, non-leverage version, but it doesn't look like there's unleveraged versions of the Palantir, the Tesla, the Meta. How come that's the case? You decided, and no .u version either, right? So,
Yes. Well, if you recall from our previous conversation, when we launched the first tranche, the first
yeah.
four, we did four different versions because we were getting a lot of feedback from the market as to should we have US dollars, should we have leverage, should we have Canadian leverage, and it was sort of an experiment for us to see where is the capital, where are the flows going to, and they were
Mhm.
overwhelmingly going to Canadian dollar levered versions. So it just made sense to launch just the one category of Canadian dollar levered versions. So that's why you don't have four of each, or even US dollar, because we could launch them if there was a lot of demand, but the demand's been running much lower than the Canadian dollar levered versions.
Okay, understandable. So it's possible maybe if there's higher demand, but for now you're just going with leveraged versions Canadian. And
Yes,
they're not hedged to Canadian dollar, right? Let's just be clear about that.
are unhedged.
They're
Yeah.
unhedged. So you're buying and selling them in Canadian dollars. You're getting your dividend in Canadian dollars, but it's unhedged,
hmm
which means if the Canadian dollar keeps getting weaker and weaker, like it has been doing,
hmm
that will actually kind of benefit the fund essentially.
Correct.
Okay,
Correct. Yeah.
perfect. That answers that. So let's talk quickly about the cover call strategy. We talked about it in the previous
hmm
video, which everyone could see, but real quick here, is the strategy going to be the same for the new ones that are come out? So cover calls on a maximum of 50% of the portfolio, and typically, I believe we said 1 to 4% out of the money calls. Is that still the case, or correct me if I'm wrong in anything I said there?
Well, you're correct. I mean, the minimum is usually around 33%, and then we'll rate up to 50%.
Okay.
Um, and they're usually at the money or slightly out of the money, but they're right around that area where you get on a 1 month call. That's where you see your sort of maximum premium levels. So we will continue to write in that level and between 33 and 50%.
Okay, so it's possible there's at the money calls, but it's also possible you're just covering 33 or less than 50, or it could be
Right.
slightly out of the money.
Yeah.
Okay, so you're capturing a good amount of upside. You're right in that
Exactly.
middle zone where you're getting that really nice income, but you're still capturing a lot of upside. That leverage definitely helps as well, which I like personally.
Yes.
That's awesome. Okay, so you launched the all-in-one HHIS. This has been the community has been buzzing a little bit over this one because we love typically all-in-ones, one-stop
Mhm.
shop solutions. So tell me a little bit about this one. Is this just going to be an equal weight of the universe of high income shares?
Correct. It is an equal weight. And as I mentioned before, we may end up having 15 or 20 of these eventually. We'll probably just limit it somewhere around 15. So we've got the sort of the highest paying income shares on an equal weight basis in the portfolio. But at this
Is
point, we have nine.
Mhm.
So
Yeah.
it's just the nine that are in there.
Is that going to be rebalanced like quarterly, semi-annually to
I
make
believe it's
equal
a
weight?
quarterly balance.
Quarterly
Yeah.
rebalance. Okay. And which ones are going in there if there's leveraged and non-leveraged versions? I think it's going to be just the leverage versions, right?
Yeah, well, they're all in there right now. And then when we do get the levered versions of Misty and Coin, they will go in there. They'll replace the unlevered because you'll have a higher yield on those products.
Okay. So
The idea
just
is
on my,
we want to maintain the highest yield in that product across those names, the current names and future names.
okay. So just to be 100% clear, you said they're all in there. So would the unleveraged NVIDIA and leveraged NVIDIA be in there, or it's
Oh, I'm
just
sorry, just the levered versions. When I said all, I meant all the levered
okay.
versions are
Okay.
in
All
there.
that's good. I like that personally.
Yeah.
So the leverage version, and I'm assuming if there's a when the leverage version, if the Coinbase and
Yes.
MicroStrategy, and you'll swap them for the leverage
Yeah.
version. New stocks coming out. So how I know obviously you can't talk about future launches,
Mhm.
and we already talked about kind of like the stock criteria. So do you think maybe you're just going to be sticking with the higher volatility, big option market US stocks, or are you thinking maybe at adding maybe some Canadian ones, do you think that maybe have some higher volatility or global equities? What are you thinking in terms of the new ones coming in?
Well, for the current in the current market that we're in, we'll continue to launch U.S. names.
Okay.
Um, we'd like to eventually launch Canadian names, and that's we've been working on that, but at this point in time that hasn't come through. But we certainly like to see Canadian names are in there as well.
Okay. Okay. Cool.
Without getting into too much detail, but that's where we're going.
Okay. Cool. And it's always going to be equal weight, I'm assuming as well.
Correct. Yes.
Okay. Perfect. What about adding like ETFs in the
Hmm.
universe, or are you guys thinking of just single stocks, just single companies? For example, like a big liquid healthcare ETF or utilities ETF or anything like that that has a big options market. Is that a possibility, do you think, or no, you're just going to stick with stocks, single companies?
Well, the mandate on this particular fund is single stocks, so that will remain um, the focus of this particular of HHIS.
Okay, single stocks. Okay, fair
Yes.
enough. Let's is there a way for like the audience to request certain stocks? Is there a way, let's say somebody really wants, for example, I think maybe Google would be a good addition. I know it's a bit lower
Mhm.
volatility, but I think, it's part of the Mag 7. It has a future with AI and everything like that. I think it would be a good idea. Is there any way, how would an audience member, for example, try to make their voice heard and say, hey, how about this stock? How about that stock? Via email, or is there an email or something like that?
Yeah, so info at harvestetfs.com. We do get a lot of people sending us names, stocks that they like, stocks that they'd like to see in there. And that's the best way because we do read it all. We do get all those emails every day and we look over them. And we do have actually Palantir was a name that we were discussing back and forth here quite a bit. And we also saw a number of audience members or people sending in requests for that stock, and that helped
Mhm.
us sort of get over the line to sort of put that into the portfolio. So we do look at requests that are coming in, and we would look at that. That's the way to go about it. So info at harvestetfs.com.
Okay, perfect. Sounds good. And of course, the question we were all looking at or we're all thinking about the yields. right? The potential distribution policy. So some of these stocks are, very highly volatile. You did set your initial distributions amount here, which it's very easy to calculate the yield because it's based on a $12 starting price, but some of them are higher than that already. But you have them here, the initial ones here. So tell me a little bit about the distribution policy. Do you see them varying a lot? Could they vary from month to month? Because Harvest is very well known to have nice and stable distribution. So tell me a bit about the distribution policy.
So on this latest tranche, what we have is a minimum distribution level. And the minimum distribution level is based historically on the volatility, the trading patterns of that stock, the volumes of that stock, and what we can generate comfortably at a 33% rate. So for example, let's look at my notes here on MSTR. The minimum distribution that we've set is 24 cents per month. As you know, with the first distribution declared, it's at 40 cents. So we're very comfortable that we can pay a higher level, but we want to make sure, so they are variable from that standpoint, but we want to make sure you've got a minimum level. So any investor looking at these portfolios can know, for example, Mr. is 24 cents, Coin is 0.22, Palantir is 0.15. So we've set numbers as a minimum level of distribution. And if we're having a fantastic month with volatility and we can pay more, we will pay more. So the idea is to provide that comfort to people to know that, as you said, in the Harvest way, we want to make sure that we've got a minimum level of distribution going out. But if we can pay more, we'll pay more.
Okay, and you'll never ever grind the fund or pay more than what you're earning, I believe, which is always still the Harvest way, right? You're never gonna have bad rock.
As I say never. But I mean, our objective is not to grind. Our objective is to earn what we pay out and pay that out.
Fair enough. And is it safe to say that for most of these, many of these stocks don't have a dividend like Tesla and Amazon, Palantir. So is it pretty much a guarantee that the fund is going to simply not going to generate any foreign income or eligible dividends? It's mostly going to, pretty much exclusively going to generate capital gains and ROC, because we know that call premiums in Canada are classified as such.
Yeah, it will be capital gains and ROC. So we don't want to generate any additional income outside of those parameters. And you're right, a lot of these stocks have no or very little dividends.
Yeah, I think like Microsoft and Eli Lilly, Nvidia, they have like a really tiny one, almost non-existent. So,
and the other benefit, and again, we're used to it because we're here in Canada, but these are all Canadian trusts. So you're holding U.S. stocks, but you're holding a Canadian trust in Canadian dollars. So you're not dealing with tax laws that you may have to be subjected to in the United States, or owning Canadian or U.S. stocks, I should say.
Correct. They're Canadian listed, so there's no 15% withholding taxes or anything like that if you're having them in a non-registered.
So what we're paying out is what we're earning.
Okay, fair enough. All right. Well, I think we'll take. We probably covered this, but I have a few questions from Inner Circle members. And by the way, if you're interested, click on the little join button to be able to ask your questions for the next Q&A. But the top voted question here, this is not a surprise, and we kind of touched on this a little bit. This is from Eric. How reliable can we expect the distributions from these funds to be?
Well, I would say that they'll be very reliable, because we've set, as I said, we've set a minimum distribution that we want to make sure that we can pay based on the history of these companies, the volatility levels, the premiums that we've been able to generate, premiums that our models tell us that we can generate. So that's why we've set a minimum level. So I feel very comfortable in saying that you can feel comfortable as an investor that these will continue to pay out for the long term. And as you know, we have a 15-year track record of paying distributions. Many of you know our main core ETFs, HTA, HHL, HBF. They're now 10 years of steady distributions and increases.
Yep.
Yeah, and a couple of our little tiny mutual funds that are 15 years old now, they've paid distributions every single month for 15 years. So that's our mantra. That's what we're all about at Harvest.
Yeah, it definitely is your mantra at Harvest. I say it all the time: the distribution, reliability, consistency. Okay, perfect. From DJ Frankie, next question, a very popular question as well. This is a good one, I have to admit. What is Harvest's assessment of their first set of high income shares, your first four? Has the performance aligned with your back testing? We talked about how you guys always do that back testing. Have they met your expectations?
Actually, yes, they have. We're very happy with the way things have gone. The NAVs have stayed pretty stable. In some cases, some of those stocks dropped, but we've been able to maintain very stable NAVs. In some cases, grow that NAV and pay out that distribution very easily. So, and we've had a lot of success. I mean, that first tranche has raised over 200 million. So there's certainly great capital that's been raised in there, which has allowed us and given us the confidence to continue to go out there and develop more of these products. So I would say, the check marks there. So far, things are going very well that way.
Great, great to hear it. Okay, next question. This is around MSTY. So obviously lots of
Okay.
buzz with MSTY, MicroStrategy with cover calls, right? It's a very, very high volatile stock. What kind of yield, we kind of touched on it a little bit, discussed it. What kind of yield MSTY will have, and will it be consistent or change month to month? So I think you did mention there's a minimum of 24 cents, I believe it was, but the first one was declared to be 40. So what are
Yes.
your thoughts on MSTY in the future of that?
Well, I mean, those of you who have been watching the trading of the MSTY in the US, I mean, that's 100% right. So that had a tremendous amount of distribution. We've set a minimum sort of between 33 and 50 rate levels. So we're comfortable saying we're very comfortable that we can pay out 24% as a base. Is that what yeah, 24% as
Yeah.
a base level. I won't be surprised if we pay out quite a bit more than that over the year if this volatility level continues and if we continue to see the movement in Bitcoin like we've seen, which has a lot of the it creates a lot of the volatility on MicroStrategy. I'm sure many of you know Michael Saylor and his whole long-term strategy around Bitcoin. So
Yeah.
we're very comfortable with that. I don't want to put a number out there, but that it can pay out that and much higher over time.
Okay, I'm pretty excited for the leveraged version
Yeah.
myself. Okay, and last question, and I think I think this was a question last time as well, but it's an interesting one. Are weekly distributions under consideration?
And we have talked about that. It's I know there are some firms in the States that have done that or are
Mhm.
looking into
Yeah.
the very uh, intense operational administrative side, very costly. And I just can't see that in the cards, at least at this point in time, the way systems are set up to bring out a weekly distribution. So at this time, it'll remain monthly.
Okay. Okay, fair enough. Fair enough. All right, so that's all the questions. Those are the top questions from the members. So thanks so much for answering those. And I think we're pretty much done. I mean, we checked all the questions out. I think we covered everything. The all-in-one is certainly very interesting. I kind of see it personally like a super concentrated like Nasdaq 100. There's a lot of Nasdaq, tech heavy stocks in there, but hey, you got Lilly in there as well. You might
Mhm.
have other ones coming. So it could be a nice way to, have some diversification all in one if you don't want to pick and choose your individual ones. But of course,
Right.
some people like choosing the stocks they love as well, which is awesome. So
Well, we're only a couple of days in
yeah, I
to
mean,
to
second,
these latest crunch, but I mean it is attracting the most interest. The HHIS
the
for the
all-in-one,
reason
yeah,
that you're
HHS.
yeah
Okay, yeah,
for the reason that you're saying people dislike the idea that as opposed to choosing one stock or another, they're just going to buy the basket.
yeah. You're eliminating your single point of failure, and
Mhm.
we didn't discuss this, but there's no. It's still a 40. All of them are point 0.4 management fee.
Correct.
And HHIS, it's not like you're paying an additional. It's basically the same thing because it holds other funds. So
Yeah,
it's
so there's no, they call it the top fund. There's no fee on the top fund. It earns through the bottom funds. So there's no additional fees on HHIS.
perfect. So basically, we could say HHIS has the same management fee as holding a single. It's the same thing. It's point 0.4, which is very,
Just
very good, very
yeah, it
competitive.
just flows through, if you will. Yeah.
Flows through. Okay.
Yeah.
And of course, the leverage ones are going to have leverage costs associated. So the MERs are going to be much higher, but that's associated with, leverage costs.
Yeah, and it's nice to see, interest rates have been tipping down in Canada,
Yeah.
and I think we're going to see more here before we see them in the States. And that directly affects the cost of leverage. So even seeing, I think rates are down about 150 basis points. That is a direct reduction of costs to leverage, which is fantastic. Helps to lower the MER.
Yeah, for sure, for sure. Okay, well, Mike, thanks so much for taking the time. Very exciting stuff. I think these are pretty much some of the best launches so far this year. I know the year is early, but I think it's going to be a key launch for the community. Very excited about it. I certainly am as well. So, as usual, thanks again, and we'll talk soon.
Thank you, Adrian, and we appreciate your support and
Always.
all of your followers as well.
Thank you very much.
Take care.
You too.